Today, I want to talk about tax brackets. It's really common for people to not have a full understanding of how tax brackets work. This is one area I think people have a great misunderstanding. Tax brackets are a really popular buzzword within the political communities, and so I think it's time we all have a better understanding of how they work. What is a tax bracket? The brackets are simply that. They are a bracket of income, and each bracket gets charged a different rate. You do not get taxed all at once. It is layered, it is tiered. When do the brackets kick in? Not until after your tax deductions, whether you've itemized using your home interest and charitable contributions, medical expenses, property taxes, or whether or not you're using the standard deduction, you're going to be taxed after those kick in. So once you've put in all of your income on your 1040, your W-2s, your 1099s, your interest, all of the income that you've had throughout the year, we subtract out your deductions. If you're doing a standard deduction, married filing jointly, for 2025, it's going to be $30,000. Once that happens, then we start in on our tax brackets. So each tax bracket has different settings based on your filing status. So if you're single, you have a different range than if you're married filing jointly or if you're head of household. So for 2025 brackets, the first bracket is your 10% tax rate. That's only on income of $0 to $23,850. The next bracket is for any income you earned from $23,851 to $96,950, and that's taxed at 12%. The next bracket's from $96,951 to $206,700 at 22%. And those go on and on. The highest tax bracket is 36%. That's 7 brackets down from what the average person starts at. Think of tax brackets like a layered cake. And married filing jointly, the first $23,850 you make, you're only being taxed at 10%. Then on that next layer of cake, is your 12% bracket. So you're only being charged on slices of cake from $23,851 to $96,950. And then that third layer of your cake, anything on that upper layer, for most folks, is going to be 22%, and that's only on the income you made above $96,950 after your standard deduction. So here's a common tax bracket myth. The higher your tax bracket means the more taxes you're paying on all of your income. That's just not true. It's only the dollars in each specific tax bracket that get those tax rates. So if you're working overtime or if you get a raise, unless your raise goes into the next bracket, you're only paying taxes on the amount of money that falls into the next bracket. Here's a real life example. Let's say that a couple married filing jointly makes $130,000. After the $30,000 is taken off for their standard deduction, they will have a balance of taxable income of $100,000. They'll pay $2,385 on the first $23,850 they made that year. Then they'll pay $8,772 on the next $73,100 they make. And finally, they'll pay $671 on the $3,050 that folds into that bracket. That means even though they're in the 22% tax bracket, their effective tax rate, what they're actually paying in tax, is 11.8% by the time you average out what they've paid in 10%, 12%, and 22%. So the total tax they're going to pay all in is $11,828 on that $100,000 income after their standard deduction. Why understanding your tax bracket helps you It just helps for a myriad of reasons. Planning is a huge, huge reason. It helps you become a little more informed on retirement and investment choices, how those are going to pay out, how they're going to impact your taxes. If, let's say, you're now at a stage in life where you're taking RAND required minimum distributions, or you don't want to hit that point, you want to draw down from your retirement so that you're not having to take so much of the RMDs as you turn 73. Well, right now you can say, if I'm having X amount of dollars come in from Social Security and X amount of dollars come from retirement, how much more can I pull out of my retirement before I hit the next tax bracket? We are all about helping our clients. So if you were to give us a call and break down those numbers with us, we can review the brackets with you and let you know exactly how much you should be paying. It helps you make better decisions for additional income. Gosh, I really wanted to, I'm a teacher and I was really going to do a second job during the summer. But if I do that, is that going to put me into my next tax bracket? But keep in mind that doesn't mean that all of your income from the rest of the year is going to be taxed at the higher rate. It's just whatever additional income that's above and beyond the bracket. Less fear. There's a lot of worries about, I'm going to end up paying so much money if I work extra overtime because they're going to tax it at a higher rate. It's just not true. You will get taxed at the rate of whatever tax bracket that income falls into. What to remember, layers matter. So only the portions of the income that fall into whatever bracket are going to be taxed at higher rates. You're not being taxed more than once per dollar. Your effective tax rate's always going to be lower than your top tier tax bracket. And knowledge is power. This helps with planning and confidence to save money for future use. I'm Katie with Pack Tax, and this has been all that you need to know about our tax brackets.